I'm David Huff, CPA with DW Huff Consulting, bringing you the August 4th, 2023 edition of News from the Front Lines of Business, where we help you as a business owner build, grow, and enjoy your wealth. So here we are, Friday. We made it through another week. Not too much going on tax-wise. We're kind of middle of the summer doldrums with deadlines and whatnot, but still plugging away. So with that, we'll share a few things that we've learned that will be useful to you for this week. So some discussions we've had. This first one here regarding credit strategies is one that kind of embarrassed to say that I kind of learned this later on in the game here. And it's the difference between how I guess the business credit lines and personal business lines differ. And when you're a business owner, you may use one or the other and kind of get it wrong. So I guess just an overview. So on the personal credit side of things, that drives everything. So you see a lot of courses out there with these credit stacking techniques and things like that. And I guess, the TikTok video, there's so much misinformation out there, it's crazy. But I guess the most important thing to take away from this whole slide here is to maintain a high personal credit score no matter what. So before we really can fully, utilize everything that's available to us to run our business better, you really need your personal score to be 700-ish and up to really, have an option. I've seen it work at slightly lower scores, but there's, other factors that come into play. But really, if you're over 700, most things are going to work out for you okay. The credit score in and of itself won't be a limitation. So, you still might need to worry about income and other things, but at least if you got that base covered, you're okay. So make sure you don't miss any payments or do anything to hurt that score. But be cautious of those TikTok videos. So as you know, we started posting that recently, so I've spent a little more time than normal watching things, and I'm blown away about the amount of misinformation's out there. Like there was one post recently. And the guy saying, hey, you form an LLC, then you get your EIN, then you get a $50,000 loan, then you do this and that and other thing, and you live in, off of that money for the rest of your life. And that's not the case, because yes, a small business can get a loan based on projected income, but you still got to have a high personal credit score in order to unlock that stuff. So if you're looking at the video and thinking you're just going to start an LLC and all of a sudden with this clean slate you're going to get a $50,000 unsecured loan, that's unlikely, and that's not been the experience I've seen with me or any of my clients that's ever possible. So gotta have the personal score in line first, and don't be careful with those techniques that make it sound way too easy. So that's always the advice. But then once you do get going, you gotta be careful that you aren't using your personal lines for business purposes. So this is something that personally still fighting with now, and I'm embarrassed to say it, but when I first started my firm and I left the job and I had to get things going again, I let some of the bills pile up a little bit, and when things push came to shove and I had to get something done, I would sometimes do some cash out on the credit cards and just put something on a charge card, and the utilization will be a little bit higher because sometimes you don't, as cash flow is a little bit tight, you don't pay this stuff off before the statement date. So even if you're paying it off before the interest date, sometimes if you pay it off a little bit too late, it still shows up on the credit card and increases your utilization percentage, which hurts you everywhere down the line. It hurts the credit score, it hurts you in every way, shape, or form. All right, so the way to avoid that is on the business credit side. So before we talk more about a better way that I could have done that and how I advise people to do it now, just ditch that myth that you're going to start this LLC and it's going to be its own entity and you're going to go get a mortgage in the name of your LLC, and that's not what's going to happen. What's more than likely going to happen is you'll be able to get a business credit card. So you'll be able to get a financial, a line of credit or some sort of credit line with some other institution. You still have to back it up with your personal score, but if you're careful about which particular entity you use and which type of line you use, the monthly reporting will not show up on your personal score. So Chase is an example of that. American Express is another, and there's plenty more, and we could talk about that in more detail if you want to. But those are two I know of that once you get approved, the activity does not show up in your personal score anymore. So when you have those slowdowns in the business where, hopefully you can pay it off, those lines of credit off, the credit cards off before you incur any interest charges. But if you can't, and you got to leave a little utilization on that. It's not harming your personal credit score, because if you got to get another line of credit, do something else further to do any kind of refinance or anything else, if you let that utilization go up on the personal side, it is definitely going to wreak havoc on anything. The business, so business, personal, it doesn't matter what you do now. Everything's going to be exponentially harder when your personal credit score takes a hit due to high utilization. I speak from experience, so I'm embarrassed to say it, but that's, I've been fighting my way out at the last year, and finally got it going with a good relationship with Chase, one of my local banks here. So it took a lot of doing to make it happen. So if you could get out in front of that stuff before you even start it, don't put anything on your personal cards. Immediately when you see it, you're going to run into that issue before things are piling up. Go ahead and apply with a top tier bank. Make sure that whatever card it is reports to your business line, not personal. So you might need to do a little research first, because not all business cards are the same. And I'll give an example. One that screwed me on that was with Capital One. So I had a card with them, it's business card, business Spark, whatever, but it reports my personal line. So every time I have a balance on that stupid thing, it hurts my utilization on the personal side. So yes, it's a business card, kind of, but not really. Be careful. Make sure you have a true business card that reports in your business line and not your personal line, and things will be much easier for you. So as things go along and you keep the personal score intact, it's easier to do things when you need to. So and you're here to, I guess a closing note here is about credit stacking. So I've seen some techniques where owners will take several LLCs they control, open up lines in those names of those LLCs, taking advantage of the introductory 0% interest rates, and utilizing that to fund certain parts of other businesses. So we like that strategy when it works, but same thing as always, the personal score has to be in line before you have the possibility of any of these other strategies. But that is a good way to do it. But if you take full advantage of the 0% intro offers there, that's something that if you do it at the right time and have that in your pocket ready to go, that can help you with expansion and equipment purchases, and maybe with some payroll and everything you might need to really help your business. So reach out to us if you need more information on that. I've learned a lot of lessons the hard way there, and I'm happy to share them with you. So last week we started to go into some posts about our Build, Grow, Enjoy wealth management system. We spent a little time this week recording some of the finer details of that. But build, so that's the first part of our strategy. So we always want to do the right thing at the right time, right? So initially we're going to focus on building our wealth. So we're going to focus on our job and our business and making money, being efficient with taxes, and just having some excess money from our labor that can be used to invest in things that will generate passive income in the future. But I want to, highlight two key points here, and also give you some ideas on how to go about it now. But first of all, let's just be upfront, is that there will be hard work. So once we embark on this journey, if you decide that you're at the point where you're willing to grow your income and earnings and get to a point where you can enjoy it in the future, there's going to be some pain up front so that you can have an easier time later. So there's going to be hard work. There's no way around it. Anybody that tells you otherwise, I would not believe. So it's going to be hard work. Secondly, we're going to want to work on developing multiple streams of income. So we always want to start with some base thing that covers all living expenses, and it could be a job somewhere that has fringe benefits, and we're not worried about health insurance and maybe a 401k. So if you have that as a base, it's not time to quit yet. No matter how good that job is, we always want to have multiple streams of income. We've seen that locally here with some of the oil refinery type jobs, and stuff happens. Sometimes there's layoffs, or restructuring or whatever. But you protect yourself by having more than one way of generating income. So I'd say even before you get into rental properties and things that are a little bit more advanced that we'll talk about more in the grow section of our framework here, sometimes there's little side hustles. Little service-based side hustles are kind of where it's at. Cutting grass. I don't know if you feel like doing outdoor work, but also other things. So we see it's so easy now to set up a website and have an online store with something that interests you that you could probably make a little bit of money on. Like this one friend of mine, I'm seeing posts trading baseball cards. So it's a hobby. This particular person obviously has an interest in it and knowledge in it, and is able to make a little side money doing that. So it doesn't have to be cutting grass or washing cars or something hard like Uber Eats or something like that. It could be something that you like, right? And it's so easy now with there's Wix, Shopify, all kind of website platforms. So it's very easy to get an online presence, open up an LLC, open up get your IN, do your little online banking account so you can take in the money and keep it separate from your personal money, and make some profit and have some other money coming in. And sometimes what I find is you don't make as much money as you think on your first idea, but if you stick with it and keep trying, sometimes new ideas emerge, and you find other things that you wouldn't have expected that will generate some money for you. So we're gonna talk a lot more about Build, Grow, Enjoy as we get going here, but just wanted to mention that briefly. So as we kind of develop in our documentation here and our framework, it was worth talking about those two key points. And if you start there, everything else will tend to kind of fall in line much easier. All right, another client discussion from this past week. Somebody was talking about protecting assets, and was tossing around an idea of putting their investment accounts, so the regular stock market type brokerage investment account, into an LLC. All right, so we'll have these two columns here in the sheet. So a limited liability company, or an LLC, that's for businesses, right? So in this example here, that would not be a good idea. So you don't want to use an LLC for personal assets, and I've seen this on numerous consulting YouTube podcasts, continuing education, whatever, where they say that if you find yourself in some sort of a lawsuit and you come to a part where you're getting a judgment filed against you, and you say you put your brokerage account in an LLC strictly for asset protection purposes, the courts may not recognize that and still be able to come after those assets. So LLC for a non-business asset is not the best way to do it. The way to do it is to use certain types of trust. So there are types of trust, which are, I guess, it's not a business purpose, but a trust is kind of a similar contractual agreement that gets, signed off on and prepared by an attorney. But these trusts can protect personal assets like brokerage accounts or your home. So there's certain ways to draft those things that'll do it for you, and that's what you would want to use instead. Right, and also keep in mind another note that some types of retirement accounts already have this built-in protection. So in most states, a 401k or an IRA or Roth will have a certain level of protection from creditors in and of itself, as it's treated kind of like a trust. So keep those things in mind as you move around. So in most cases, I think most people will tend to have most of their investment accounts in an IRA, so don't necessarily need to even start looking at trusts or anything at this point, because they have a certain amount of protection that's already kind of built in kind of baked in. So keep those things in mind. Reach out to us if you have more questions, but the takeaway here is LLC for business assets like your company checking account and your company vehicles and equipment. Trust for a brokerage account or some other type of maybe a holding company or something like that. So all right, so that was a lot. Closing thoughts for the week here. One of the guys I follow all the time on YouTube, Jocko Willink. So he's a military guy. I really like some of his information about showing up and being present. But misspelled podcast here, but ignore that. Jocko Podcast 396 at the 53 minute and 20 second mark. They talk a little bit. He's doing an interview here with a Marine, and he goes off in a discussion here about as a point in time when he had this bad leader that was kind of having a toxic effect on all his men. So the way he decided to deal with this, and he'd been taught this at some point in his life, but he kind of remembered it at this one point, and just reiterates the fact that you can only control how you show up. So you show up, you do your best. You're going to have these bad leaders, these bad situations, and these setbacks, no matter what's happened in life, no matter how good you lay it out. Sometimes you're just going to have to deal with something that's not ideal. And the only thing you can control is how you show up. So show up, do your best, forget everything else, and keep going. So check it out if you get a moment. I think that interview was pretty long, but I found it very useful. And and not just the part about showing up. And so feel the leadership discussion. So it's well worth the watch if you want to have it in the background. So with that, get out there, build, grow, enjoy your wealth. Definitely enjoy your weekend, and we will see you out here next week.